Let's see if that solves it. Bring your computer. Tom brought his whole computer. A couple people did that actually. They brought an all-in-one. We had one person actually bring the Apple headset. That was cool. It works now? Okay, so I guess I needed to add myself to the scene. So if it's working now, that's good. I don't hear myself. That's weird. That's weird because I have a window open, but okay. I'm good with that. Stereo. As long as they're dubbed right. Otherwise, it'll be like a Bruce Lee movie. 5547 is support one pivot. And look at you, Climber. If you guys, Climber is going to cover the room on Friday. So he's so gracious with that. It's going to be awesome. Last time he did, he made you a ton of money. And everybody was like raving for days on after. Oh, we loved it. Backed by popular demand. Do you do a trial day? I appreciate these videos. So you're welcome, Raul. You're welcome, Dave. Bill. Uh, can't tell who that is. Do I do a trial day? Which video is that? Markets under stress. Neve, are you in here? I know you, Neve. Late end of month webinar. And there you go. So I told you don't hold puts. It looked like they wanted puts, but they were like drawing people in. Let's see if they can sustain it. They're making a little bit of headway. That purple line I didn't put today, but it is relevant today. So the zone, purple, yellow, green bars, the two arrows, let's delete those arrows. They paid well this morning. Whoever bought puts on those, you didn't tell me how much you made. I didn't have time to quote you. Um, but let's check on our credit put spreads, the ones that are struggling. I'm trying to keep an eye on it for you guys and girls. Okay, so it's still a coin flip for the ones that rolled from yesterday. The one from today are working well. The Iron Condor from today, the new one from today is working well. The credit put spread from yesterday, is wonky quotes because price is moving fast. The quotes have been very, very aggressively jumping up and down, which is probably a byproduct of the VIX, which is dropping. So don't hold puts here. If you're holding calls with runners, I don't mind it. I just want you to lock some profits. So the green arrow played out. We can take that out again, also, not again. So not to confuse people. Now, I tell you, if we make a new low of day, now it'll be a game changer. I wouldn't add two longs, no, because we're going into a prior pivot zone, and we are in the middle of my orange box. Now, I'm telling you this, if we lose the orange box, we go to 550. We go to the orange line below. This orange box now needs to be um, the range for the day. If you breach the upper end, you go to 565. If you breach the lower end, you go to 550. That is a tradable thing right now. So if you're holding calls, I'm okay with it. I wouldn't add. I would definitely lock some profits. I wouldn't back out of a credit put spread, and I would manage a credit call spreads if they get under fire. You're looking at leadership from the mega caps. You need to have that upper right hand corner. You need, I wouldn't call that leadership, but you need maturity from the Excel posse, as we call them, Excel this and that, all of these guys, especially the financials. Okay, but now when they rally, they're going to start facing some resistance. Credit call spread, I already shared one this morning, and it was at 5,700. If you want to do one now, you'll have to step down. Let's see what we can get you. Oops, wrong one. Believe it or not, 56.75 gets you $50. That is insane. This market is uncommitted. 56.75 expiration today, credit call spread. If you need a visual of it, to give you placement on the picture. So this morning, this was the one rolled from yesterday. That's the one in trouble, getting out of trouble. If the bell rings right now, you're a winner. We added a credit call spread to it here. It was $1 this morning. Right now, 56, what did I say, 75? So just below this one pays $50. So the people who had this one rolled from yesterday, gosh, what's going on with this platform? Okay. Um, I'm struggling here technically. I'm sorry about that. Lost my screen. Right. The people that took this one from yesterday and rolled it to today added this one for $1. That one is already delivering profits to offset whatever losses they end up suffering here. So I'm saying if you want to take one now here, you can. It only pays $50 though. It paid $100 this morning. Not as good. Okay. Anybody stuck in trades other than these and not fast trades, you need to speak up. This is a place where we discuss all speeds. It's not all about fast trading. What strike price? 56.75, paid $45. Now it's dropping. So, but that was the level. No, it is 50. The quotes are really wonky. So if you're looking at a credit spread, credit call spread, credit put spread that expires today, you're facing quotes that are jumping. So you're going to have to watch the quote and see if you're selling and it shows 35 and then it shows 60 and 35 and then 60 and 55. Try 65. And if it doesn't fill, drop it 5 cents. It trades in 5-cent increments. Yeah. So I was emphatic not to hold puts, right? Once we stabilized at 554, Tom and I discussed it. I showed you and I said I wouldn't hold puts. Well, now you can buy a put if you're fast to get from that point where we are to 556.50, which I cannot be that fast. Personally, I would pass up on this opportunity. But if you're bearish on the day, this is your entry for the put. you can get to here. Maybe, maybe. But they will probably try to do this. And then you have to deal with all of these lines. Everything, lines, boxes, when you see them and they're above you, they're going to play a heavy uh, resistance role. Well, they kind of put spread on it. I wouldn't add more credit call spreads unless you really want to be active today. So if somebody wants to be active today, they can, like if they collected, here's the dilemma. So if I had this credit put spread right here and it's in trouble and I collected $100 here, I can close that or add a credit call spread here and make it really dramatic. So then the math would be, look at my screen, plus 140 credit to open, roll, and add the credit call spread. And then you add plus zero point 0.5, point 0.8, I'll get you an exact number, to open another credit call spread here. So now we would have, um, you would be almost at a coin flip risk reward 2.2 in credits, reducing the maximum loss to 2.8. But the drama would be that you now would have two credit spreads on top. Let me see if there's a number that would make sense on the credit call spread. You know, it's 56, 55. Really? No. Yes, 56, 55 is flashing 100 and then 55. 56, 50 credit call spread pays 115, $120. Wow, that's impressive. 56, 50. So if somebody wants more drama, they can get 1.1 here or one ish at 56, 55 or 56, 50, somewhere in here. So again, the math will be 140 from these two, and adding the green one would add another dollar, reducing the maximum loss to 280 per contract using that math from today. But that's it requires you to monitor the whole day, and I don't know if you have that in your schedule. Do you have that script? So, oh no, I can get you a copy. I may have changed it a little bit. Do you remember if you emailed it to me? Okay, so let me look for it for you. Send me an email, Linda. Here's my email. So I don't, there might be a dip, but I think they will buy it and go out here. So this arrow might not play out. That's why I don't think I'm fast enough for this. So I'm going to delete it. Anytime you say, wow, they're paying, they're probably going to earn it. I'll be right back. This stall here is normal and healthy. Hey, Bill, good recovery. Nice. I appreciate that email you sent me yesterday. 560. Well, these days, Linda, 560, 565. We're moving in dollars, no longer pennies. Yeah, honesty is good. Um, the fact that the VIX is halfway through the range of the day, so it's well out the highs, is comforting for the bulls. They made a higher high on the VIX, which is good for us, the people who like to sell risk. Yesterday we debated the not we didn't debate, we highlighted how people panicked. So how bearish have I been for the last few months? Annoyingly bearish, right? Keep saying stop hodling. Too many people are too happy. It's a very annoying message because going against the grain. But I also said why a lot of times because I'm looking for a top, and the top is this. This is a top process. That's part of the process. A top shouldn't be like a roof. So on the way down, what did we do on the worst day? What trades did we do? We sold puts into people who were panicking. So we're trying to make money off of people who don't do homework. We look for turning points because those are very, very, very fruitful. You saw Coca-Cola yesterday. How fruitful was it in just one day? And that's just an extreme. And yesterday we sold puts in Tesla at $90. Somebody paid $450 to please buy their shares at 90. 90. After the 15% drop, it was still over 200 and somebody's panicking at 90. These are actual trades that actually happened. They're in my portfolio. You can see it. Same with Nvidia at 70, $4. So the break even point, if we get assigned at 70 in Nvidia, would be 66. And somebody actually believed they were doing a smart thing. So the only way that is a smart thing is if we're actually market wise is going to absolutely get crushed and crash. Not like correct 10%, 20%, like crash 40%, 50%. Anyway, unreasonable markets makes for opportunities for premium sellers like us. That was an interesting thing that just happened. What time is it? Is there some sort of a Michigan report, whatever, to be ready for? I took a more conservative trade on Tesla. Someone paid me. Jim is even more conservative than me. So that's funny. Put it in out there. That's funny. Jim says, in case you can't read it, someone paid him $115 to sell a drum roll, $40 put in Tesla. Thank you, Noah. Nothing that important. Maybe the 3-year note is important. We do have inflation numbers tomorrow. I would not want to be long overnight or short overnight, short term. Like I would not open a credit spread for tomorrow if I don't have to. If I'm rolling something, that's one thing. But if I'm starting something fresh, I would do it for 2 days after, not tomorrow. Because the data has been consistently getting worse and worse on inflation. Maybe it changes. Um, I think the price of milk and eggs and all of that has that hit. I don't know. Has there been a drop in oil prices, gas prices? I haven't filled up my tank. I did, but I didn't notice what the bill was. Um, I don't know if gas prices have gone up or down. Is it a lot up, like where enough to hit inflation numbers, or no? If it's only a few cents, it doesn't matter. I can't believe we haven't been able to drop the oil prices. 4.8 at Costco, that's where I filled up, but I don't remember looking at them dollars. Where to 85? What part of the world are you in? Mm, Connecticut. Okay. Where in Connecticut? Hartford. And what's your mother's maiden name? And the last four of your socials, please. Oh, and your address. And I'm Golden. Hartford. I've never been to Connecticut. I have a friend of mine who lived in Danbury. The first pet's name. Yeah, I got that one wrong the other day. I was like, what do you mean? I will take those questions. I will take those questions for security, where the silly 20 questions over the ones where they say pick the blocks that have like a traffic light. Uh, I can't stand those because the quality of the pictures is crap. You can't see anything. It was like, okay, is that a car? A wheel of a car? Is that a bumper? Is that a car over there in the background? I went to the DMV and I was trying to do something at the DMV. I went 25 minutes and failed every one. I failed so many that then they gave me a different mode. It says keep clicking until you don't see buses. So you would click, they change. You would click, they change. It's one picture, it keeps changing. Stop clicking when you see it, when you no longer see buses or something. I failed that one. It must have been a bug in their system. There's no way I failed them. Yeah, I recorded it. I wanted to put it on social media. I was like, no, that's too long. I recorded it. It was like 10 minutes. Turned into a video game. Who's old enough, while we wait for this process to go up to the yellow, who's old enough to have had a Casio watch with a game in it? Yes, the calculator and a 20 name bank and a game in it. The game was the numbers come up and you have to zap them, right? You have to match them and hit. The numbers come up from the right side and you're on the left, and you need to move the number up and down to match the numbers coming at you and zap them one at a time before the numbers caught up, and they got faster, faster, and faster. I had it in black rubber and then fancied it up with um, metal, like silver colored metal. Those were the days. How about the first digital watch, which also was a Casio for me, where it's a 7 segment display, a dark amber colored glass that's always black, and then whenever you wanted to see the time, you push on it and it lights up red just for the amount of time you're pushing. And it had the beep 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 on it. I would like that alarm back, please. Very gentle. You had two SPY April 576 puts up around 85%, sold one and rolled the other to April 11th. So you gave yourself 7 extra days for another $9 credit. Wait, you rolled it. Oh, you rolled it down. Yes, outstanding. So what Craig's saying, he's rolling a position, but that's the positive kind of roll, like like Ryan does. Hey Ryan, what are you into now? I saw you trade this morning, but so when you buy a call, when you buy a put, and price goes your way, like it did with me with VIX yesterday. Somebody else with the VIX, they rolled calls. So you roll a win. Let's say you had invested 1,000, it went in your favor, and now it became 2,000. And you roll means you close the 2000, you acknowledge and realize the gains and reopen a similar trade with less money. I sold all of my Johnson and Johnson spare today. I couldn't resist holding and think, um, okay, let me know if you need update on the chart. Credit call spread on Duke. That doesn't sound like a chart, like a stock I would do credit call spreads on. Um, Let me look how liquid that thing is. I don't do spreads on stocks that are not liquid. There are no weeklies. I would not do that trade. Although it does have a lot of, well, I don't want to stop you from it. I don't think they're going to pay you anything for it at 135. You're going to collect maybe $38. So if there's earnings between now and then, I definitely would not do that. On Duke, let me know you heard. Decent volume, but there are no weeklies. Try it out and see how it works. That's a flag. That's a pennant, I think they call that. Point A to point B. No weeklies. If you go to the options chain, they don't offer options that expire every week. This is working out well. So pennant, you've heard people call it, oh, it's a bullish flag, it's a bearish flag. Flag is a flag. They deem it bullish or bearish when the way you're coming at it. So this is the flag they're talking about. They call it bullish when you're coming at it from below because they anticipate this, which is nothing different than what I said, right? They deem it bearish when you're coming at it from above, then they anticipate that. But it's the same thing. And broadening wedge, flag, pennant, all the same, different shapes. I think the pennant looks like this, like a flag like this. For me, I saw a dip and a rise. It says the same thing. I'm not on mute. Let's give him audio. Right? Audio's here. Confirm. Audio. Someone. One person. Yes. Okay. Thank you. Um, push-up challenge. We can do push-up challenge. We can go head to head in Dallas. I'm still not at 100%, but I'm a lot better. Yesterday was the first day I fell short of my goal because of my headache. Exit credit put spreads green. Every time I'm wondering if I should exit for profit, I do. Well, what is the high? Give me a number. What is the SPX high? I don't have the SPX on my screen. 55, 55.05. You mean 56.05? Well, 56.10 is 40%, so the odds are quite flippish. That's not the high of the day. You said breaching today's highs. We were in the 56, were we not? We're at 55.90 right now. What are we talking about? Thanks, Jack. Look at your question, BC. Ask me again. Last 2 days, over 5K. I'm so excited. What? What? Oh my gosh, you just made my day. Good work, girl. Wow, high five. That's a good result. Yeah, don't mess it up. Do you mind if I share a picture in the chat? It says your first name. Or you want me to block it out? Not in here. Okay, good. I'll post it in Benzinga chat to encourage some people to come in here. Question. You have a sell put option on TTD in your dashboard, which is red. I have a small position in it. Just wondering. Okay. Nathan, are you in here? Somebody's asking me about the TTD. Okay, so if in case you didn't hear my answer, TTD. I sold a put for us on TTD. By the way, if you guys are holding credit put spreads from yesterday and you get relief, let me revisit that before I move on the tangent. Use any strength here. Like I say in the morning note, use strength to lock in profits, right? So on the way down, TTD, the trade desk fell on earnings or something. And unfortunately, we caught the falling knife, as they say. And it continued to slide since then. Luckily, we didn't buy calls, we didn't buy shares. We went the conservative way of selling a put to own shares. My bad is we should have started with a sold put spread, but I thought that we had enough buffer. The things continued to fall, and now it's at the put we sold. So the put itself, the position is very, very red, which is always the case. But let's say I wake up tomorrow and I own shares because somebody decided to put me the shares from those puts I sold. What happens is I would wake up and I would have 100 shares for every put I sold of TTD, and the put position will disappear, taking all the losses with it. The paper losses, I never realized them. So if I buy the put back now, I'm going to book a big loss. If I don't, I would just be assigned shares, and then I can immediately turn around and dispose of those shares, sell them right away. If I wanted to own them for the long term, I would sell a really aggressive covered call and I would be even right away and making money. But I personally would probably sell the shares right away. So if I'm lucky enough to sell them at 60 or higher, I would be broken even or make money. If I sell them below 60, every dollar below that would be $100 loss. And that is also acceptable. Now I can lower it so I can roll it down in the same period of time. Pay $2 to make it 58. Um, I think it's premature to do it now. I can roll it down and out. All of these are possibilities. And I can also buy a couple of puts or a put per one I bought um, for May at 50 or 55. I don't know how much they are. Hopefully they're cheap. And what does that mean? If we crash the market and it goes to 30, I'm out at 50. So I'm only reduced to a $2,000 loss versus the whole thing. So I can do that. All of this stuff is on the table. We're trying to see if they're going to hold that platform they just went over. So if you're holding calls, the easy work has been done. So consider this box on the left side, this this orange box, our field of play for today. The upper third of it is going to be difficult for bulls. The lower third of it is going to be difficult for bears. So if I'm holding a call in the upper third, I would exit. If I wanted to start to short, I can do that. I don't want to short. Um, the distance down doesn't look that inviting unless you think we're going to come down to 556, which is possible. Let me try to get you charts that would say whether this is a good idea or not. Okay, so I see us coming down to 556.5. It's a possibility, like just below the purple line. I don't know if I can make money on this drop inputs unless I'm super, super fast. So I would forego that. I would rather start it from here. So if we go up to here and you want to short it with a put for this possibility, yes. So I would try to engage with a put, but from a higher level, like to do the path, the red path. Right here, there's nothing to do except manage your open risk, lock in some profits. Now, in the event we break through those two red lines, this orange box, we will go to 565 or try to. So if you're holding calls for that, I'm okay with it as long as you know you're in resistance territory. Now, for the rest of the day, we should stay inside this orange box. That's how I would treat the day from here on out. Now, if I'm looking at the credit put spreads from yesterday, they're still $1.50, $1.60. So they're the delta is 0.34. The premiums are too hot for that delta. So I don't know if they plan on pulling the rug from under the bulls' feet. I don't see any signs of it, but I'm well aware of the risk that is there for that. All right, let me see. Have I missed any comments? If I missed your questions because um, if I did not answer your questions, is because they scrolled off the chat page. People who are watching on YouTube, um, I'm streaming today on YouTube. We're gonna do that once a week, maybe for a little bit. We do this every day. 275 people today, maybe a little bit more, maybe closer to 300. The platform doesn't count all the call-ins. We crush it, right, folks? Oh, look at you commenting. I just saw that. Neve, you messaged me on one of the videos. I know you, and you still want to try a free free day? There's your free day. Sign up. If you don't like it, I'll give you your money back. 1K today, nice. Okay, Baba gap up held. Is this bullish? No way am I investing in Baba at these levels. So China has a big QE going. That's very concerning. So this is a 15-minute chart in Baba. Those two candles are telling. Tell me when it's going to get out of 142. And it's shortable into 146. Above that, maybe. But as it's approaching a prior failure, I don't want to go long Baba. Not here. This is a trading comment, not an investing comment. You want puts on Baba? Mm. I would rather sell a call spread than a put, to buy a put, and maybe a combination of both. Speculate, that's fine. I would speculate by somebody else's money. Sell a call spread. Collect somebody else's speculation that you think is wrong. Credit call spread on Microsoft? Hmm. Hmm. Okay. You're basically shorting the market. Why should Microsoft fall without the market? All right. So I need a minute to trade my account since I have so many open trades and I own stuff. Usually I don't own stuff, I sell stuff. But when I own stuff, you need to be active in your ownership. All right. So Cisco. In case you missed my note on Cisco, the easy money has been made, even though I think there's a lot more money. It's up 82%. It's a naked put bought. I looked at the chart. It has a lot more downside to go on the daily, but that means that there's going to be a lot of support zones in between. My trade is from May 16th. Um, let's see if we can monetize it. There's not a lot of premium. Like if I sell an at the money put for this week, it's only $64. If I go to next week, it's $64 for the one below that. So it's not that enticing. So this is where you decide, okay, I think I will take the Cisco put off. It paid $225 or $220 per contract on Cisco. Let me look at the chart one more time. So this chart says that Cisco can be at 56 down here. But then it also says, look at the volume just below here, this one large candle. So I would rather short on a bounce, like avoid, miss out on the downside. It's falling into, wow, this thing is so overextended. It's crazy stuff. Look how look how beautiful these long dated harmonics are. Oof. Target one is like 54 inside between these two. Yeah. Very tempting. Thank you, Rego. Yeah, yeah, yeah. Anybody can trade. You guys can trade whatever you want to trade, however you want to trade. Oh, I think the headache is going away today. I just noticed. I have not taken medicine yet, and I don't feel the need. An hour ago, I felt. Maybe because the house is empty. Would have the headache walked out the door. Okay, so my point, Bill, is that you're picking on one of the strongest fundamental companies. I think it's easier to short the S&P than to short one company in specific, especially now. But if you have um, if you have a chart, like convince me, what is possessing you to short it? Let's look at Microsoft chart. Go up to 30-minute chart. Okay, so a 30, 15, 15, 1 week, 2 hour, 1 hour. So now 30, 15. Okay, let's go here. 15-minute chart. So this is near term price action in Microsoft. Okay, I see why you did that. What level are you selling? Um, Blood Moon. That's a gold trade, I believe. Credit calls for the 415. Okay, I don't mind your level if it pays. I don't mind it. Go right ahead. It's inside my resistance zone. Why not try to make an iron condor out of it? Like, if you're collecting $50 to $70 up here, why not collect $50 down here? Avoid the earnings. You have sold puts, okay. Then you should have led with that. Maybe you did. I missed it. That balances the trade. I'm okay with that. Okay. The K. What? I'll be right back. Sorry about that. I heard voices in the house, and the house is supposed to be empty. Somebody showed up to perform a job that they were hired, and I didn't know about it. I was on mute, yes. It spooked me. You know how you hear voices in the house and nobody's supposed to be in the house, and you go, wait, what? Who's saying what? I know my dog can't speak. He's smart. He's not that smart. Okay, now I'm back. Yeah, I see dead people. I'm serious. I was like, okay, let's grab this thing here and go check out the house. US Steel, what about it? Don't trade that stock. It's a headline stock. Buyout, no buyout. There will never be a buyout of US Steel. It will not happen of US Steel. That's like Nippon, whatever the company from Japan wanted to buy it. It will not. So I would not trade that. On top of it, so you know how I say tariffs are not that important to a lot of companies, but they are important to specific companies. Like a company that depends completely on a commodity, and if that price of the commodity, and they have either sources or markets with tariff headlines, the stock price is volatile. So it's not going to matter a lot to Apple if we jack up the tariffs on iPhones, because everybody wants their iPhones and they'll figure it out. But for a steel company, it might be hitting the bottom line. Here's my take on the tariffs. In the end, there's so much money that they will figure it out. This is a negotiating tactic on everybody's behavior, everybody's part. And the entity that doesn't figure that one out will end up losing. And it's usually not the biggest dollars. Those with the most to lose have to concede. It's a fact. Otherwise, they lose everything or a lot. Like in 2018, it was US China. And the balance of trade favored the US, meaning China had more to lose than the US. So the US will take it to the not will take it to the end. Because in the end, if everybody loses everything that they have on the line, China would lose more than double that the US. So the US would win by default. So you don't want to negotiate from that position. And the people are all jacked up about the Canadian tariffs and all of that. It's just leave it behind. If for trading purposes, I don't let that come in the way of that. My purple line is breached. You are too accurate with that purple line. That purple line is old, so I think it's a box. It's a zone. The line really is more like 556. It's a confluence of prior orders and Fibonacci levels. Anything between 556.8 and 555.5 is a zone. So the VIX is neutral. The market is neutral, right in the middle of the day range for me. Buying a put here would be maybe good. Buying a call here would be maybe good. So I don't have any tells. This is a target that I thought we would hit, but not until we pop up here. I would not start puts here. You're talking Gan. We lost Adnan, so we don't have. I don't have my contact to Gan. I would have to send him an email. So this descending wedge inspires a pop. Let's see if it shows up. The baseline is. See, it's hard to tell. These candles are so close together. There's no weakness in these candle sets. The weakness is coming from freaking JP Morgan and such. So earlier today, I said 47.31 would be a target on the XLF, and they were up in the 48.20. They hit that. They went to 47.28 and bounced. They bounced and ran into target two. So the ETFs are a lead balloon right now, and Apple is not helping. I told you Apple would be in trouble. Linda, let me see what I got for you, okay? Um, do you use TradingView or just Thinkorswim? Okay. Andrew, are you here? Today is the 4th. Okay. Let's do that for next week. I'm going to take a couple paper trades here for demonstration purposes for this week. What? Are they serious? Oh, phew. Good old freaking 17th, 14th. Is the 14th Friday? Yes? Yes. I had paper trades in that account, in a trading account. That's hilarious. Yeah. So this is where you can pick up a call to get to 557, or if you have a put, I would close my put. I don't think we've reached a new low yet. There's no signs of it. There should be a bounce from here to the purple line, maybe a little bit above the purple line. So if I had a put, I would lock it in right now. These are fast trading comments. The same thing, the same thing. I think there should be a bounce here. Let me check on the VIX. The VIX is slowly crawling up. As long as we're holding this line, which is the low of the day, there should be a bounce. Now, the question is if we do that. Let's look at the components. The small, okay, so Apple is a lead balloon, and guess what now? It's joined by Google. So Google is in threat of breaking the overnight low. If that happens, it will join Apple in accelerating lower. Be careful. Those two together are probably 10 to 12% of the S&P, maybe 10 to 11, 9 to 11. I'm pretty sure Google is close to 4% of the S&P. Apple is 7. So let's go with 9 to 11% of the S&P, those two stocks alone. So they're putting pressure. So I've used those words. I said Apple, when it was rallying in the last 2 weeks, I said Apple has become a risk on the market because it's overextended. So it puts drag. So everything I'm saying here, I'm trying to um, put eyes on possible incremental selling pressure. That's why I have these things on the right side. The top right-hand corner is about 30% of the S&P from 5 or 6 stocks. Those are them: Google, Microsoft, Apple, Meta, Nvidia, and AVGO. They're heavyweights. They're more heavyweights in the Nasdaq than the S&P, but they're heavyweights, and they're stalled at where we thought they would stall from yesterday. So I understand why they're not making headway. So imagine if Nvidia goes red today, on top of Apple and Google losing their lunch. Meta is showing me some strength, which is risk appetite. So let's use Meta like Twilio. I would not hold puts here for the day. I would not try to get this done. And if I do, I would try to get it done from a higher level. So if you want to buy a put from closer to 557, okay. But this scenario might not play out. I would sell a credit put spread. Now, if I didn't have one for today, I would not back out of the credit put spread this early in the day because I think I have time to manage that. So those are the trading comments on this one. I will check the comments and questions in a little bit. I'm answering questions in sidebar right now. Why? Okay, that's one for that. This is a drum roll that's gonna have to hold. Who? Apple? That's not the only thing they screwed up. You know what else they screwed up? They didn't fill the position of a CEO from the outside. That's what they screwed up. They should have brought somebody like Benioff, not this gentleman. He's not the right guy. Phew. trying to pick up on the body language of the market is an art right here. So we have bullish posture on the XLs, even though they look weak. We have weakening mega caps. We have support from today's range on the S&P itself. We have the VIX fear trying to decide what it wants to do next, still hanging strong. They're like, this is a face-off. Everybody's got guns in each other's faces. What is that called? A Mexican standoff or something like that? Where everybody's on edge, everybody has opportunities. Now it's the decision who wants to click. I would not hold a put here. That's what I'm saying. And if I'm buying a call, I should put a stop. Like if I spend 300 to actually, if I take a position, calls or puts here, whichever side you fall on, whatever money you're risking, decide what would get you out ahead of time. Don't decide that when the problem starts. Like if you say, okay, I'm ready to stop out, and you don't have a number, and then things are going against you, and then you're trying to find that number, calculate the number that would get you out under calm conditions, relatively calm conditions. If you spent $300 to buy a call or a put, make it a rule. If I lose $50, I'm out. Or pick a number that's appropriate to you, or pick a line on the chart. Say, I know I'm going to be down maybe $50, $60, but I don't want to bail unless we lose or unless we breach. Pick something on the chart. The bounce should hit 557, the purple line, or the green line just below it. So 556.7, 556.8. I know it's not a lot, but it's 0.8. In the past, we would love to get a 0.8 move. But with the VIX being that big, they move in dollars. Have you noticed? We move in sheets. When before we used to move in little tiny ones. $550. If we lose today's low, that's within a target. If we lose today's low, we can drop $3 to $6. Those are my comments from relatively the same levels as I commented on in the morning note or the video from last night. So for me, every time we lose my range, the brown box on the left, orange box, if we lose it on a closing basis, not like if we tick below it, tick and hold, we would shoot about halfway of that distance. So if the low is 554 and the mid is 558, that's $4, $3 to $4 of potential downside. So I can't tell you it's going to 550, but I wouldn't hold a put for it. If you want to hold the put, this is where you would get engaged with the put, somewhere in the middle of the orange box, which is close to the purple. So if you bought a put for that opportunity, you're not wrong. I'm looking at the VIX. I'm trying to get some clues. I'm looking at Meta. Meta is getting bids. I don't think downside is easy from here. This is like almost 6% 5% downside in a couple of days in a market that is fairly healthy. So I would say it differently. The easy drops have happened. Yesterday's shakeout was sizable, so like the first level of weekends have fallen off. But you are absolutely correct in trying to hold puts. I favor the calls, or I shouldn't say it that way. I favor a credit put spread. So I don't want to buy calls. I don't have that kind of conviction, but I don't think puts will pay either a lot. So you understand my answer. Like I think buyers of puts and buyers of calls are not incorrect. They both have plans. I favor the calls. I favor the idea that puts are not going to be able to pay right here, right now. Short-term comments from point A to point B. Nothing about this afternoon, just right here, right now. I'm looking at everything I'm looking at. And if we get to that top right, that top red thing right there, buy a put. So the top third of this orange box on the left is shortable. The lower third is not. Short-term comments only, please. Linda, I got your email. I'll find it and share it. I wonder. Linda, are you still in here? Okay. See if this works. This is it. I have another one. See if this works. I would find it hard to put a lot of money at work here in buying this or that without selling. Like even I don't know if you have the margin. If I buy a put here, I will probably finance it by selling more puts below. So I'll try to fade it but not collapse it. IWM, yes, yes, something new. So I do like the range in the IWM. It's been pretty fine. 200.5 or higher should be difficult. 200.8, 201 shortable. If you make a lower low, you could uh, 199 through 198.50 solid support. You lose 198.8, you might open the door for 197.50. So bearishly biased, sell rallies, yes, yes. Oh, 195 for tomorrow? Hmm. 198 was a target of mine from a while back. Let me zoom out and I'll get you that. Oh, yeah. So now you're playing a CPI. You don't need my charts. I'm not good at guessing like that. You have the advantage. You're a better guesser than me. Who does well on earnings, direction? You do well. This is that type of decision. So I will take your lead on it. My take is that the CPI is bad. The market is going to suffer. Yes. Bad news is indeed bad news. I don't think they believe Powell can do much with cutting rates. Yeah, yeah, yeah. But you know, the CPI, they weird calculations. You never know what comes out of that thing. No? What happened? Okay, so let me give it to you in a text file. You know how to use it from a text file? Yes. Okay. Hmm. That didn't work. You're right. So let's try it differently. You see how they're crawling up? This is the Bulls' opportunity, the Bears. So now you're drawing a head and shoulders, where you also have a harmonic, a bearish harmonic. And if you lose the low of that bearish harmonic, you're going to accelerate to the lower side. I still don't believe they can do it. I would not be in puts. Lost sound. What to do? Linda, try this. This is called Linda, so I'm hoping this is yours. That should be multiple windows. This is it. This is the bear's opportunity right here. The VIX is not telegraphing a debacle. Um, Apple is approaching a one standard deviation for the day, so it's already approaching an extreme. I would not be holding a put here. There's a chance that they come up, take the purple line as a catalyst to come up to the thin red line. Okay, let's see how the YouTube folks are doing. I haven't paid attention to them. YouTube folks, if you're not subscribers, go subscribe. Try it out. You won't regret it. 200 and almost 300 people today. This the counter does not count call-ins, so it shows 270. I'm gonna guess 20 to 30 people calling in. That's a healthy group. So people tend to come up to the live room on Fed days because they're pretty violent, and when the market goes into either a super spike or a super drop, then people need to pay attention. They have questions. They tend to pop in more than the usual. But we do have a solid 250 at all times, which makes for a good group of traders collaborating. The days of trading alone are out and gone. And if you are trading alone, you're going to lose if you're on the other end of our trades more often than not. We do well. We sometimes lose, but not easily. This is it. They're coming down with momentum. The shape matches the little squiggly I drew, so we're not surprised. The VIX is a little bit stronger, but if I look at the ES, the futures contract, same as the SPY here, they do have a bounce that is solid. So that I'm thinking they're going to defend it. What you don't want is Nvidia to decide that it wants to have a moment. Nope, rejected. Yeah, I don't think the puts should play out here. It's been a struggle for the Bears to punch through. Head and shoulders. Yeah, well, what that is, it's a neckline. They're fighting over lines, Linda, Laura. They're fighting over lines because every time you break through a line, whether up or down, you accelerate in that direction. I'll be right back. Nothing happened. I walked away and nothing happened. I love it. Meta is like stuck, and I use it as a gauge of risk appetite. Let's do Bitcoin. Same. Um, Yesterday we traded Bito, bought shares, sold covered calls. I may get called away from my shares this week, and that would be an easy $120 win. If that happens, I'll repeat the process for next week. Make sure you don't have tax issues from that. Trading fast like this. XLP makes a lower low. I'm holding my puts there in case you followed me. Those puts I did not announce anywhere else other than here. And unfortunately for the people that are not here, they're up almost 100%, not to count the sold calls, which the other people know about. So I guess I'm saying what was working for the market will stop working for the market either way. That's why I insisted shorting Coca-Cola, McDonald's, XLP in general, stocks that look like that. Because the only reason they're doing well and breaking records is because of this notion of safety. Let's say the market doesn't need the safety because it resumes up, they will ditch the safety, right? So they fall. Let's say the market continues to fall down, the safety trades will fall apart too. So it was almost a no lose situation. Those are rare. You got to take advantage. So what did we do? We sold calls to buy puts. That is the best, strongest put position possible, most aggressive. So the decisions is to book a $4 win. Your struggle is real, man. Real weird. Let's see. Should I book? Anytime. Yeah. Anytime I'm wondering about locking profits, I lock the profit. What do you think about credit put spreads for Apple? No, but 180 is fine. I don't like Apple for myself. So no for me, but viable trade. Somebody's asking about selling a credit put spread at Apple at 180, 180, 180, 180. Yeah, 180. Apple is deteriorating conditions. Mind you, it's still an amazing condition, but definitely falling back. Um, he's got a lot of heavy lifting to do in the next couple of years to show us that he's still relevant. I don't think in 2 years we're talking about Apple the same way we're talking about it now. Then people will say, "Oh, what about this and what about that?" And they'll start um, nitpicking. What is that when they say when the tide comes out, you find out who's wearing a bathing suit? Well, when the sales, when the financial situation is no longer as awesome, I'm not saying bad in 2 years. There's no way it's too good. But if the financial situation is no longer as awesome relative to the other companies around it, like Microsoft's financial situation and growth and all of that, that's still amazing. Nvidia is more than amazing. Google still amazing. If Apple starts to fall on that, will it still be the king of stocks and the king of companies? Or will they start saying, Tim Cook, what have you done? No, no, I know which one it was, Linda, but my thinkorswim moves so slowly, it takes me a minute. Um, I have another version of it that I modified for myself. I can share that, and you tell me if those are them, if that'll do. Let me see. I'll try one more, okay? I'll get you going. I just need to find the right one. I have 4 instances of thinkorswim open, and they're all crawling, and they're small, like small instances. I haven't shut down the PC in a while, so I will do that tonight. This is an unbelievable tight fight right here. Nobody, they're holding their cards close to their chest, as they say. You got to know that the reward is so nice to just pop up to 559. Let's do this, bull. Do it. The Bears have the setup. Look at this beautiful Head and Shoulders. Now, my take on Head and Shoulders is not a reason to buy a put. It's just a reason to say, okay, if they do break down, this is my reward. So then you decide, all right, I'll hold a put. And it's definitely a nice reward. I don't think they'll hold 551 if that triggers. Triggering is now, if I was a market maker, don't buy a put as we drop. So if I was a market maker, I would go, oh, I'm injured, and go, boop, and then do this. This will trap bears and will stop bulls out the orange path. So this will get everybody into puts and get the people into calls to stop out, and then you revert and go higher. Otherwise, the downside target is definitely below 550, below the orange line on the bottom. The myth the needing a new phone every year has died. I agree. You know why? Because I think they stopped slowing down your phone on purpose. Didn't they get in trouble for that? So they have to be more subtle with that. That's my take. That is not it. Okay, that is not it. Um, ooh-wee. Listen to bulls of Apple and bears and also Nvidia, and the Apple bear was telling me there is a gap fill at 157. It will fill the gap. Wait. You're talking Apple 157? Uh, yeah. No, that is not a trade. I would not buy a put in Apple because there's a gap from 157. There's like a mile of things in between now and then. So um I would not trade that. Let me see what we got here. Are these Fibonacci's? 50. Yeah. So Adeline is just pointing out that we're stalled here because it's a significant long-term level. It's about halfway mark on a long-term perspective for the breakout. Yeah. Good observation. Plus or minus a little bit. So the 61.8 and the 38.2 around. The golden zone is what it's called. I think this is it, Linda. I think I found it. Let me share it with you. Share. Eek! There goes the pop. Linda, try this. The VIX has made improvements. Again, in case you missed it yesterday, nice work there. In case you missed it yesterday, I said actually this week and last week we have approached VIX levels from September of 2021. In case you don't remember what happens back then, what happened back then was we had a correction start that lasted about 10 to 12 months, depends on what sector you were looking at. And it was about 30%, 28 to 32% correction in the stock market from the top. So we don't quite have exactly the same scenario. But here's what I did this morning in case you were here earlier and you weren't here earlier. I dropped the VIX down and I went back to that period of time and I said, tell me what the VIX did back then. So I believe I captured October on. And I said, all right, let's put that path on this spike. And this is how it matches up. Spike, drop, spike, drop. So the next time the VIX drops, I put alerts. If the VIX drops to here, we start selling credit call spreads in the stock market. And when the VIX comes up to these levels, we start selling credit put spreads in the stock market, which means we're trading the range using what market makers, and we will do it 3 weeks out. Why? Because the VIX is 3 weeks to 4 weeks out. So this would be the stupid trade to create income from how freaked out market makers are over the future of the market. Yeah, but those were different conditions. Um, every correction is different. Well, I shouldn't say that. We haven't had two similar corrections in a long time. The major one was the collapse of the financial global financial network, which was real. And then we had a couple of freakouts in between. Was it 2015 we had one? 2018 we had one. But we solved those with a QE. Oh my gosh, the stock market is falling. QE, cut rates, buy, buy, buy. So we created inflation, and then we were hit, unfortunately, with the pandemic, and they overreacted. The world shut down, created a huge backlog, a shortage of stuff because we closed everything. And so demand rose, and or even if it didn't rose, supply stopped. So everything became more expensive. And what did we do? We threw trillions of dollars at it to fuel the fire. I'm not saying they had an opportunity to not do that. I'm just saying the end result was what we have now, which is a pickle, which is why Powell should not do anything because they can't fix it. We have a table and we have a chair, and one of them is wobbly because it's missing a leg. We can't fix both. We either live with inflation to fix the economy or we let the economy suffer so we don't. You understand? We cannot fix both. You cannot solve, Powell cannot solve the problem. If we're not going to spend, we're just going to have to suffer and burn off the inflation. How does it burn off? If the car retail price is 40,000 and they have enough buyers at 40,000 and then some, they will raise it up to 42,000. If they don't have anybody buying it, then they will drop it down to 35,000. The market will find a way. They need to continue selling stuff. They will lower the price when we stop buying. The only way we stop buying is if we get hurt. I know these are tough talks, but that's the only solution. The Fed should stop doing anything. Convince the world that. Hard, tough sell. Master market volatility. Join Chris Capri. How about no? Can you review coin chart? Yes. What time frame are we looking at coin? You still have the TTD trade. Well, I have it. That doesn't mean you should have it. I'll explain. It's bad. The trade is really bad. If I get assigned shares today, if I wake up tomorrow with shares, I would sell the shares and I would not lose any money. I collected $180 to open. The stock is $125 below my strike. I would make 40 cents. However, it is a dangerous trade. So if it's a large position, I would cut it to size or defend it. How can I defend it? I can buy a put, temporary put, midway. It's not going to be cheap. So I will go to like May and buy like a $45 put, get back all my money at 45. So the put is $177, almost exactly what I collected. Therefore, um, so if you buy so you collected, I'm guessing $1,200 to open the trade. Oh, more than that. Wait a minute. No, um, I don't know what you collected. What did you? Let's say if you did six, multiply that by the number of contracts, you collected that kind of cash. You can invest all that cash to defend it. And one way to defend it is to buy naked puts shorter dated. So that will be a temporary defense for 66 days. Um, this way, if it continues falling, you stop your bleeding at 45. That's one way of doing it. You can roll it down and out to slow down the trade. So let me give you that opportunity on that one. If I wanted to roll it down and out, you can roll it down to 57.50. Let's see here. You can roll it down to 55, 50. Okay, you can roll it down to 55. So close it at 60, open it at 55. Pay $70. That leaves you with $100. And I'll write this up. Wait, that is not right. Buy to close, sell to open. That is not right. I don't know how. Oh, I had another leg. Okay, you can roll it down to 57.50, which is just below current price. Doesn't do a lot. What it does is you pay 130, which leaves you with a $40 credit, and you say, okay, I'm a little bit lower than current price. That would be one thing you can do, but it doesn't accomplish a lot. Okay, so let's look at an alternative to roll it down and out. Let's say I'm going on vacation, 900 almost, and I cannot deal with this year. I'll go to January and I'll sell the $50 put for January. It will cost me as much as I collected. So what does that do? It puts my problem lower and it makes my problem slower. Do you understand? But it doesn't accomplish anything. I'm still long that stock. If I close the one I have, I would sell the $50 put for January. I'm not doing it today. I told you why not. I'll do a write-up on it, or maybe a video or something. Well, if I wait like you and try to do the other trade to close, I don't understand. Can you restate it? If I try to do the other trade to close. Oh, okay. So if you get assigned and you don't have enough money in your account to cover, you shouldn't have sold the puts. Um, Let me rephrase it. I don't sell puts of stock I don't want to own. I have to be willing, and here's the other part, and able to buy. Unfortunately, the platforms will let you sell puts you cannot fulfill. That's criminal. I don't know why they make that happen. But even then, if you wake up owning shares and you don't have enough money and you get a margin call, sell the shares right away. You satisfy the margin call and you get out for no loss. Right now, it will be no loss. Um, I was trying to do something here to get you. I'll get the coin chart in a minute. Um, shoot. Oh, I was gonna go see the write up. I'm pretty sure I worded it. This is a stock I would like to keep and I don't want to defend. 1 second, okay? I wrote it up. TTD, there it is. Delivered a strong report, grew sales 22%. Wall Street clearly wanted more. It fell 30%. The dip is a buying starter opportunity for somebody who is not yet long the stock. Method one, I can buy shares, part one of two, like half the shares. Um, I said I would use a second batch if the stock falls another 25%. Method two, the one I did, I just sold a $60 put to be assigned those shares at that price. That was my wording. I sold those puts to be assigned the shares at that price. This makes my break-even price of 58, which is today it's at that price or a little bit higher. I collected $2. Quotes are wonky. I said, be careful. I would have taken as low as 1.6 if the fills are tough. So this is how I did that. And then I said the credit put spread would work as well. 65-60 if somebody did not want to be assigned the shares. So it was written up in the right context. Starter position, lower, want to own shares. Um, all of these, everything else says, okay, I don't do anything now. The Ryan puts her up 20% on what? IWM? Nice. All right, so coin. What did you want with coin? I feel like we did coin this morning. Are we talking fast trades or what? I would not be long coin at all. In fact, I would not ever invest in a company whose income statement is that wonky. We discussed that. Now, long term, it is you have a credit call spread. Okay. You want to share the whole thing? If you shared it above it, scroll off the page. Can you just give me the details of that trade? Like what level, expiration dates? I don't mind being assigned the shares on TTD, but would like to sell a call. If you can't sell a call until you get assigned. They may not assign you. I'll give you an example. Earlier we spoke about the letter X US Steel. I sold a put at 9, naked put at 9. It fell to 4.8 with 3 weeks to go, and I did not get assigned. You're losing money. They will assign you, and you will buy it at 60. You need to stop the bleeding. You can sell naked calls low delta. Absolutely. 20 delta. Risky maneuver, though. The risk profile of a sold naked call is infinity. The risk profile of selling a put at 60 is 60. No problem. Okay. It is definitely not a good situation. It would have been fine if the market did not continue to correct. So let's look at the chart. All right, we're talking about it. This is TTD, the trade desk. All right, so here is the weekly chart. We bought the dips somewhere after the earnings, so I'm going to say it was 75, 76 or something like that. So we weren't reckless with our entry point. It hit two targets of 3. The third target is 40-ish. But everything between here and 40-ish should be solid floor. So the way I would deal with this is I would keep rolling it. First of all, the trade is for May. Getting assigned $2 deep in the money for May is low. It is possible, but it's low. I hope to God they assign me tonight. That way I would get out of the trade for greens tomorrow. Like We wake up and I own shares. Sweet. Thank you very much. I'll move on. Didn't lose anything. Um, if I wanted to buy the put right now, I would lose a lot, like $600. So for me, the break even point decision from now is if it falls to 54. That would be like me buying the put back versus getting assigned. If I get assigned at 60 and I wake up and it's 54, it would be like me closing the put right now, which is why I'm not rushing to do anything right now. It's already in trouble. And so rolling down can slow down the bleeding. I can only roll down one leg. So I would sell the 57.50, buy the one I have and sell this 57.50. I pay back almost all of my collections, and the break even would be 57. You can do that any point in time. And then later, if it continues to be in trouble, you can roll it out and down. I just gave you an example. If I go all the way out to January, I can go down to 50 and still keep my credit, or $100 of credit. So 59, 58, 49, 48 would be my break even point. Let's look at the chart where that would be, somewhere down in this zone. So yeah, it sucks, but that's still like 14% lower than here. The P&L is fine. The business is whatever, cloud based, is okay. Okay, so I told you I wouldn't do it for myself, but you seem wanting to do it. I don't like that idea. You have to survive an earnings report reaction and all of that. If it pays $6 or $7, I get it, but all of this for $100? You can buy a put and sell two puts below it. So to stop the bleeding and take the shares lower, but that also requires margin. So I guess what I'm saying is just buy some protection to buy you some peace of mind and decide in the next couple of days what you want to do. I have not bought protection. Um, Maybe I should have, but that's in hindsight. We're here. I did the math. This is where you just pray they assign you. You can roll it forward so they can assign you. So let's see here. We are in July. Let me see if I can force them to assign me. 8. What if I go to this week? There's no 8. March 28th. Yeah, I can't do it. It doesn't work. Sometimes the math works, not this one. Whoa, 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 whoa. Something just blew up in a good way. KO? What happened? Come to Papa. No, but that's not it. McDonald's. What's going on? I don't even own a put in McDonald's. Why is it working so well? Something is working. Which one is it? The VIX is up 100%. Maybe that's it. Doesn't account for all the math. XLP, that's what it is. XLF and XLP. Oh well, so I get stopped out on 2/3 of my XLFs this week. Ugh, rats, man. But that's okay. I'm still short Berkshire, which is behaving. The market's risk comes from these ETFs that were rallying incessantly, and I was hating them on the way up, notably the XLF. Orange line on the SPY. The one below? Well, if we don't recover 555, we might drift lower, yes. If I'm holding puts, I'd be ready to book. So I wouldn't hold puts. But if you are holding puts, I think we go to 554.8, so close to 555. We go back to try to recover the neckline. We get back in my orange box is what we're trying to do. I think we go there, 554.8. Let me put a squiggly mark on there. We try to. If not, we dip and pop. So if you have puts, what I would do is enter an order to close the puts. Let's say you bought them for $300 and you're okay booking X percent, X dollar, $80. You say, okay, I would like to sell these puts for $380. The order will sit there because the price is 300. I'm making that number up, by the way. And if the S&P drops quickly, you will get filled and you won't have to chase it. I think that if we dip to 550 and a half, we pop back to 556. Amazing day so far. I love to hear that. All right. Hopefully we can make every day amazing. Oh, I guess I should have done that before. What an idiot. I blame the headache. Hey, no headache now, but I blamed it earlier. One moment, please. Okay, let's double check. Yeah, we need to roll again. Leave the credit call spread where it is. I'll tell you where to. Shoot. It's roll it to tomorrow, same level. It should be the same cost, maybe $40, $50 more. I'm speaking to someone who has 5575 credit put spread for today. They rolled from yesterday. They've collected $140 in total. They might need to spend $30 to $50 today to roll it to tomorrow. Same level. So that we will go back to $110. Let me know when you do that. Then we will sell a credit call spread against it. And then we will cross our fingers for tomorrow's reaction. The trade is in trouble, so we're not like being reckless about it. We're trying to salvage it. Actually, let me price the day after tomorrow. Same price. Yeah, let's do tomorrow. Roll it to tomorrow. And then we would add a credit call spread to it to turn it into an iron condor to deal with tomorrow. And the level on that would be 56.70 or 56.65. And I'll give you a visual at what we end up with. Yeah, 56.65. So roll the credit put spread to tomorrow. I'll put the SPX bottom right hand corner. The credit put spread in trouble. We move it over to tomorrow. We close it today and we open it for tomorrow. And we add a credit call spread, which is an opposing trade. In total, you should stay with $140 to $150 in collected credit, and we'll deal with that problem tomorrow. So the Bears have the advantage, but this is I wouldn't if I had puts, I would be locking my puts here on this dip here, foregoing the total downside potential of this. So we lost my orange box. The downside potential is $3 to $4 from that. So 550 is in play, is what I'm saying. I'm looking at the VIX. I need to see more strength out of the VIX. Otherwise, the VIX might suddenly drop, headline coming out or whatever. Um, Apple, man, Apple. Oh, Google did trigger that bearish position, just like Apple. And so the bears have everything. Why are they not filling this? They had everything. XLI is broken down. XLV is already broken down. Apple, Google. XLF is about to break down. The VIX at highs of the day. Why aren't they filling the target so fast? There's something going on that I'm missing. So Cisco, I need to lock Cisco profits somehow. Nice work, you guys in there. Some pretty good work. It's a tough hold on puts here. Like these, they should be at close between the close to the white line down below. Why are they not there? The quotes were funny, yeah, that's for sure. So part of the thing we did yesterday when we rolled those credit put spreads is that we made them smaller. When they rolled, it was a credit. I said, don't roll the same. They had four, now they ended up with three. So now they have 25% smaller problem than they did yesterday. I'm not taking that into account either. Oh, did you roll it or no? Let me see if I can help you with the quotes. 5575. I think it's a $50 debit to make that happen. If you put all four on one order, you buy the close, the one from today, and you sell the open, the one from tomorrow. A differential of $50 would fill it. $40 to $50. Yeah, the quotes are jumping all over the place. Like if you look at the SPX now and you're doing spreads, ooh boy, they are like wild. 1 minute it's 325, the next minute is 275, then 360. It's all over the map. So something is going on behind the scenes. Do we have a headline brewing in a minute or two? Drum roll. Let's see. Heather, are you in here? You're asking questions. This week only have some calls. Oof. Okay. What are the calls? People do tell me the whole thing. Wild. We're on 15-second charts and it looks like it's standing still. The ES, the SPY, the QQQ have not made a lower low. That's because they don't have XLF. We said the opposite things on the way up. We said the QQQ is easier to short because it doesn't have the XLF. Ugh, what a market. Exhausting. To see them that dumb is just exhausting. Did you do it? Did it work? Not filling at what, 50? 60, okay. We are officially in correction territory. I don't know if I call it a bear market territory. I don't remember that on Wall Street. They call this a correction and then a recession at 20%. What does that mean, bear market territory? What do they mean by that? Bear market, okay. We're probably still up 30% a year, 12 months. It's not a usable comment from their perspective. I thought they call 10% a correction and 20% a recession. No, 10% a correction, 20 recession. Boom. This is going to fill you. Look at it right there. Boom. You just filled, no? Sold 3, credit call spread 5665. Did you? Are you asking me or? Oh, for tomorrow. Okay. Oh, okay. So it filled? No, really. Interesting. Violent. The quote is 120, but it's not steady. Go to, let's see here. Hold on for a second. Hold on. We're trying to manage a credit put spread that's underwater. I know there's more than one person in one of those. Okay. If I look on the 5-minute chart for today, we have descending wedges. We should come up to 557 in the next 25 minutes. There should be a move up towards 5 6. I don't know how it's going to happen, but we should tag that orange line. That orange line, I think, is still in play. There's a descending wedge, and it should snap, even if it's just one time to come back down and go lower. Well, I think they need to try to get that orange squiggly mark up. They need to trace out this path. I don't think this path is dead. So let's see for the next 10, 15 minutes what happens. If I have a credit put spreads already in trouble, it's in trouble. What am I going to do? I'm going to get kicked out is what I'm going to do. You're going to lose my screen in a minute, and it's going to take me about 30 seconds to come back in here. So people on YouTube, don't freak out. Actually, YouTube, you don't doesn't affect you guys. You people here. You're still holding puts? Yeah, there's something weird. Why are you not making more money on the puts? Oh, IWM. I'm speaking SPY. The IWM has 3 bottoms here. It's at what it does normally for the last 30 days. So if you don't get a flush low, I would get out of those puts. It has 4 bounces here, and it's at the limit of a normal move for the day. The next limit is 197. So somewhere between here and 197, you need to book your IWM if you get that chance. I don't know if you're going to get that chance. Why have they not gone there already? Everything is laid out. Are they? Nobody has the courage to buy calls. So who are they trapping? I think the bears are just done for the day. We shall see in the next 20 minutes. I don't think they can hold longer than 20 minutes like this. The XLF is where it's going to make the difference. So if you're short the IWM, make sure you pull up a chart with the XLF. In fact, I'm going to do it for us right now. This is everybody. I'm going to focus on the XLF. Everybody else is already broken down. The XLF is not yet. This is where the answer for the day is going to lie. Or maybe. Let's see. That's why I don't think holding a put here is that rewarding. No, I shouldn't say that. It will be rewarding. I don't know why they haven't taken it. It might be a trap. And also there's the VIX. The VIX has a shape, and I fell for it again. Can't do that today. The VIX has a shape today, like this, and drop, and this. If they don't make a higher high, they stop here, they're probably going to do this with the VIX. So hunt the point D in the VIX is a thing. So that's what I'm looking for. Question when you have a minute. I still have 4 SPX, 4720 credit, but 47. Okay, so wait. 57. 5720. 5720. Yes. It's definitely underwater. Did you sell it? I think we've talked about this before. And did you sell a credit call spread against it? All right, so you need to tell me what your break-even point is between both, selling the call spread and selling the put spread. How much premiums did you collect? IWM credit put spread, bottom right-hand corner. I mean, sorry, 30-second chart to help you guys with that. Yeah, so I don't know what to tell you. You're going to sell an iron butterfly as you roll, like sell aggressive credit call spreads. I don't know if you have it in your account to sell a naked call. That would be the best hedge. 5720 is way up there. Today I'm trying to work with 5575. So luckily you have time on the clock. I would be aggressively short between now and then. So do the math. So somebody has a credit put spread that's buried in the money, out in time. Sell credit call spreads aggressively against it, shorting the market along the way. So by the time you get there, you collected $2. That includes the roll. How about the credit call spread side? So your risk is $8 so far, but you said you made an iron condor to begin with, or you sold credit call spreads. You need to add those in there. What is the net dollar amounts? Drum roll. Wow, wow, wow. Let's go. Battle zone. XLF holding. IWM not holding. The industrials are falling apart. That probably is a heavyweight in the IWM somehow. Google, no floor. Apple, no floor. Meta, well off the highs. Uh, okay, so you collected 3, so your maximum risk exposure is 7. Do me a favor, go price a credit call spread at wherever you have your credit put spread. So credit call spread at 57.20 for the same time frame. Price that and price it halfway through between now and then. It can be the one halfway through can be $5. Let me rephrase. Price me the credit call spread $10 wide at your leg, and one in the middle between now and then, $5 that pays $1, and do both while you wait. Closed my 560 put for 37% gain. Didn't want to get greedy in case of a bounce. The level you provided are on point. Who is this? All right, nice work, Yuzan. That's good. Rodrigo wants to see evidence of this stuff in the chat room. We shall do that for Rodrigo. I'm going to get cut off here soon, like any minute now. I'm surprised I'm not off. It's amazing to me that people still don't know how to get the password to get into this room. Thanks for helping, by the way, whoever answered the question. Raz. Any magnets? Good question. I haven't looked all day. Yes. Well, not from Tradietics. There's a lot of money transacting at 550 SPY, but XSP says, no, I don't think so. We're where we want to be, maybe $2 higher. So now it's a push-pull between the XSP and the SPY. I think 555 makes more sense than 550, to be honest. The SPX doesn't care. The SPX is so wide right now, it's providing no. I still think up is easier from here, even though it's not looking like it. That's partially why I like it. I'm not being contrarian, I'm just being realistic. Weird quotes are crazy. Yeah, the quotes are crazy. First of all, the VIX is super high and the market is under duress. I bet you $1 would fill, but I would hate to for you. Have you tried 80 cents to roll? What was the highest? Go 10 cents higher, the highest you tried. Yeah. Try the highest. If it doesn't fill, add 10 cents. And wait. Green ticks will fill you. If we get a burst, it'll fill. I thought that other burst would have filled you, but it didn't. There was a little burst right there. Credit call spreads on what? Oh, credit call spread 5, 10, 20. That's not the same as yours. You have 5, 10, 20 credit put spread, so you need to be 5, 20, 30 credit call spread. So collect $2 from a credit call spread above yours on the same expiration, and collect only $1 from a credit call spread on the March 31st. So go up higher. You can do more than one credit call spread. Like if you're comfortable selling, if you bought one or the other, if you sold one of the others on the credit put spread, you can sell two March 31st credit call spreads that pay $1, not three. That's too much. Okay, so IWM, are you still in it? Are we still tracking it? That was a burst, yeah. Filled on 80. Okay, greedy bastards. All right, so now you still have zero point 0.6 credit, and you're in a position for tomorrow. We want to sell a credit call spread to bring it back up to like, so sell a credit call spread that pays $80. So let's go find you. So the person that was stuck in a credit put spread for today rolled it for tomorrow. Whoops. And we're trying to get a matching credit call spread. Tomorrow is the 12th. $56.50 would give you back exactly what you spent. $56.50 is about $85. Credit call spread for tomorrow that matches, balances your credit put spread. So you will end up again with about $140 of credit in an iron condor that's slightly bullish. Um, that's, I think, would be good. And if we get a green open tomorrow, then you'd be golden. If not, then we would have to repeat this process again. But once you do that, let me know. Filled on 80? Okay. No, that was the old message. You guys, I hope you're listening, because that's the same process. Credit put spread, moving it to tomorrow, adding a balance to it. Filled at 90. Okay, so now you have, you paid eight, you had 60, you have $1.50 in credit. Do me a favor, sell another one, credit call spread, two, not three, two, and for the day after tomorrow. And I'll tell you which one that would be. 1 second. What's just, of course, I get kicked out as soon as I do that. 246 participants. 1 second, folks. I'm getting back. We're helping manage a bad credit put spread. This is the byproduct. Luckily, we don't have these situations often, but when the drop is this big, it's this big. All right. Credit call spread 5. For 57.40 for the 13th, if you want. If you want, I think that's a little extra. Let's say the reaction is bearish. You know what? Maybe just one of those. One, if you want, to give you an extra $50, literally. Um, so an extra $20 per on your three that you have. Maybe we should do that. Skip that for now. Too bad we can't do it later. Later in the day would be fine. Skip that for now. All right, I like what you have. $1.50 in credit, Iron Condor, bearish but bullish biased, meaning you want a positive open tomorrow or a positive close today. Can you open an order before you leave to close everything for $1.50? No. Let me see. What I want you to do is to close it if it spikes, but I don't. I want to double check your break even point. So we did 56.50, 55.75. It's 3.4. Yeah. So open an order to close it for like $1.70. So if we rally while you're gone, it will close and we'll deal with it tomorrow. I don't think it's going to happen today, but if it does, it will get you out of everything break even. You understand what it just did? We have a credit put spread. We have a credit call spread. The value right now is 3.4. Your break even point is 1.5. Enter an order to close it for 1.7. That means you accept a loss of 0.2. I think that's a good win if it happens today. If we spike, you might get that done. Both, all four: credit call spread, credit put spread, everything. Close everything that's left over for tomorrow. Say close today at 1.7. I don't think it'll get there, but there's a chance when you leave your office, if that happens, you'll get filled and get closed. All right. It's not a big deal, that last part. If you can get it done, that's great. Okay, it expires 3, down 50%. Somebody owns a call in Apple. We're doing triage. I asked for feedback, and the Apple call expires this week, and they're saying, what should they do? And I asked for the feedback for the, okay, so the delta is 30. Your odds of success are not great. Delta is 0.3. If you still have the reason to own the calls, I would want to move it to next week, just in case they don't bounce back this week. When you move it, see if you can keep the money at risk the same size. I'm not sure they can, but I'll say it. All right, so you see how I thought that they would trap some bears? And that's what they did, but they did it from a lower perspective. They went too far down. That extra, that was nice. Nice touch. So if somebody bought puts on this extra, they're stopped out now. That's a 40% loss on those puts. From this bounce, and done for the day, Eddie. Good job. Stop, man. You played big. Luis made up yesterday's small loss and reached my daily goal on top of that. Going to step away. High five. That's great. You met your daily goal. You managed yesterday's tough position. Commendable. Sergey, 57, 20, 30, April, $4. That sounds high. That sounds really high. Okay, so, but because you've collected two, and if you're collecting four, that's $6. Really? So go higher a little bit and collect like three tops on that credit call spread for April, and then do both. Do the same level. Um, you're not understanding the assignment, so I'm gonna go do it for you, Sergey. Give me a minute. I don't trust these numbers, so I will do it for you. Is yours an AM settled contract? Okay, so you can do 58.30, 58.40, April 17th credit call spread. This is for Sergey only. Only. Whoops. This is not me shorting the market. This make it against your credit call spread, the credit put spread that you have. This should give you 2.8, maybe $300, and you have two. You said so that's $5. Now you cut your profit zone is $5, and your risk is $5. That's a 50-50. This math is weird. Something is weird with that, but I'm going to trust you. So that is one thing to make your credit put spread that's in trouble a really, really, really tight credit call spread and a credit put spread, iron condor. On top of it, I would also sell a credit call spread shorter time frame. Um, if you are at April, we'll do March 21st PM, the PM contract. PM contract. I would do 58.20, 58.25 credit call spread for March 21st PM contract, not AM. March 21st PM. It pays a little bit more and you can trade it on that day. The AM contract, you're stuck. You do these two, you would balance your credit put spread that's in trouble. So now do the math. You have 200, you said, from selling your original trade that's in trouble now. You collect 300 from the new credit call spread, the top one on my screen here that I just posted for you. So that's $5. And then you collect another dollar from that credit call spread that dies faster than the other one. So ideally, you want by middle of March to have collected that dollar completely. It's in your favor. And then now suddenly you can only lose $4, even if the other one goes to maximum loss. And you have a chance on the rebound to kind of like play around with that credit put spread. You're going to have to come at me in a couple of weeks to see what's going on. You might get in trouble from the credit call spreads, but you're already in trouble from the credit put spread. So what does it matter? Don't thank me yet. You're welcome. We're not out of trouble. There's a lot of talking, and you guys don't know what I'm talking about, but I'm doing my best explaining the situations. Showing it's a bear put spread. So now the question, will they hold halfway through? Will they hold that thin red line that drew itself? That red line I didn't draw. Everything else is mine. That thin red line right there, that's a Fibonacci number of sorts that comes with the study. Outstanding study, by the way. All right, so now what the bulls want, they want this. Earlier we said I will dip and pop. They dipped and popped, except they dipped deeper than I thought. So what they want is this, and then take the battle back to the purple line. Um, eyes on the VIX, eyes on the XLF. I think they have more upside in them. IWM bearish positions, I think, are not that great right here, but you trade your own charts. 557 is target for the bounce. Um, yes, 556.9, 557 is a potential target. The reason I say potential is because the starting point was lower than anticipated, so they might shift everything down. But all this is hinging on whether they can hold half this. If you give up a lot more than half of this, so I'll give you my line. If you give up this yellow line right there, that's just BS. Drum roll, drum roll right here, right now. Um, let's add the buy. Let's add the indicator. No, favorite. Let's see if it's too noisy. On 15 seconds. I don't usually watch it. It says buy call. Boing, we bounced. I don't know if I can ever trade 15-second charts with an indicator that says buy call, buy put, because it's so quick. You're going to have to be like an amazing trader. You're going to have to use orders ahead of time. In a put for crowd strike, so you want me to switch over to crowd on the bottom right? Okay, be careful. 330 plus, it will take off to 332 and 3 and 4. Well, you have a hard line. 330.1.2 will launch it to 333 plus. Short-term comments. Which indicator is that? That is my own, inspired by something Linda had passed. Buy, just swing trades. Buy, sell. Buy puts. Buy calls. Buy calls. It works on all time frames. 5 minutes looks great on 5 minutes. For my speed, the 5-minute time frame works great. I have not used it for swing trading, like big picture swing trading. I bet you it'll work great. All right, I'm going to stop the YouTube transmissions. Thank you for supporting us on YouTube. We thank you for your support. If you're not members, get your butts in the room. What are you waiting for? You're welcome. You won't regret it. Whoa, look at the size of that cup and handle. If we get to 555, 60 or 70 or 556, we could get $3 to $4 of upside. So 57 might overshoot to 58, 58 and a half. This shape that never, well, it did materialize in the morning, but similar shape right there, only bigger bowl. But from here, like the breakout anyway, it's right there. This depth would be the opportunity up. We never got that opportunity. We wanted the pop to short. It didn't go high enough. We will move these squiggly marks from this morning. They might play a role later this afternoon. This as well. Actually, it's right there. I don't need to, but I'll put it for you visually. And the upper end is a purple box. The purple box is definitely a problem. There we go. Boing. Is it a public TD? No, this is mine. It's not public. I shared it with the people who went to the latest charting class. I made it by invitation. Come to a class. I'll share it with you. It's really simple scalping. Really simple. I entered the order to close the credit put spread. No, close everything at that level. But that's okay. That's better than nothing. I meant to close everything. But this is fine. You know what I mean? I want you to be out of the trade completely for $1.70, which almost is an impossibility. Oh, okay. Then whatever you need to do on your end, I don't. Good luck. Okay, so there is a dip coming perhaps from the purple line. See how it all lines up perfectly? The VIX is doing what I told you it can do, which is draw a letter M, hunting point D, as they say. This is important, the next few minutes. All right, let me go shut down the YouTube stream. Thanks, YouTube. Later, bye.